Good morning, everybody. I hope you had a glorious weekend. Wow, it was 73 degrees here yesterday. Went to see American Sniper yesterday, and after the movie was over, got home about 3:30 and sat out on the deck and enjoyed the hot weather. And it did seem hot after the cold spell that we've been under. So life was pretty darn good this weekend. If you get a chance to see American Sniper, don't miss it. It is a very profound movie, and it's not hokey. It's about as realistic as it can get, and some of the scenes in the movie took me back to the ramp when I was flying in the military, hauling some of those young men around back in the what was going to be our last bad war, Vietnam, but we've since made Iraq and all the other ones bad wars too. So all wars are bad. I'm not being facetious, but anyway, if you get a chance to see it, it'll move you. Right now, the biggest news event this week is going to be Thursday's ECB announcement, and everybody says they're going to take in sovereign debt with some restrictions, and it's going to be 550 billion euros or $668 billion per month commitment to the market. Since March of 2009, the U.S.'s QE has supported the market. When Japan announced their QE, all the markets have exploded. When Draghi would talk about his upcoming QE, the markets would explode to the upside. So stock markets are up on the expected European Central Bank quantitative easing program to begin this Thursday. Now, we'll have to see if that happens or not. And the market is expecting it. The trial balloons have been floated, and that's where we are news-wise. So look for the stock markets to trade with an up bias this week into the QE announcement, and look for financials to be sideways, a little bit lower into that announcement. It will devalue the euro. The euro will come lower off of that, although some of that is already built into the market, but most people expect the euro eventually will be par with the dollar, and that would make the European Central Bank happy. In that situation, they will be able to export more of their production outside of the EU, not just to EU members. So that's what the market is set up for this week. Our news slate is minimal this week. Today we have housing market index, and it's expected at 58. That would be supported for the stock markets. Pretty easy to move that number around. Most people don't pay a lot of attention to it. So what we have right now is I think we've got really pretty good support in the 12 to 20 area. And I think we got really good resistance in the 28 to 04 area. So we'll make our first sell 27 to 31 and 3 to 7 for sell 2. And on the buy side, we'll make it 17 to 21 for buy 1. And I think we can do a little bit better than 13 to 09 for buy 2. So we get up there. If remember, if number 1 resistance holds, if 28 to 30 holds, we should have a pretty good shot of making it to number 2 support. So keep that in mind when we take it. So I think the first trade is to the short side on the financials, given the lack of news and the strength in equities. You know, when you experience 70 to 75 degree weather in the middle of winter, you completely understand why the rich winter in Florida and summer in Maine. Pretty darn nice. Okay, the knob spread is held in pretty good. It widened over the weekend. And again, the long-term economic contraction that's going on, most most of the long-term bond players think that the world's economy is in contraction right now. It's not in a growth mode. The hope is still China, the United States, and Germany will pull the rest of the world through. The IMF lowered their forecast for world growth from 3.8% to 3.5%. Now, all these major governmental agencies and nonprofits make these forecasts, and they're as rosy as they can make them. They have to maintain a little credibility. So not 3.8%, but 3.5% growth. And China economic report this morning, as opposed to showing 7.2% growth, it showed 7.3%. That was also cited as a reason for stock market strength around the globe. But the real reason is the ECB is getting ready to move. Okay, top of value is 24, two-letter ledge is 29, so selling failure to get through 24.28, and then we'll make 31 to 03 for sell 2, picking up this area right over in here. On the buy side, this one's a little bit stronger, but I do think we're going to trade a little lower, and we've had no trouble getting to our buy levels on this contract, so we'll make 5 to 9, buy 1. May have to pay 13, don't think so. And then 29 to 01, coming back into this area right over in here. Okay, gold is up around the globe. There's fighting in the Ukraine. ISIS has said they're going to kill 2 Japanese captives. I think the announcement was within 72 hours, so I think that's for tomorrow. Anybody else experiencing Don's problems? Testing, testing, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Testing, testing, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Don, restart your browser and come back in, see if that helps. It's amazing to me how you'd think if one lost it, everybody would lose it, but that's not the case. So how it goes out from any meeting server to your ISP is probably where the problem is. I will not stop the program. So we're going down. We're looking at gold. So gold was called higher because of the coming ECB devaluation, and that would make some sense. That would make sense. So the 78 to 80 area where resistance was, we had an 80 to 82 sell when we left on last Friday. They blew through it in London, so we have these single prints right here. So 85, 87 is pretty good support. We'll make that buy 1. 80 to 82 is buy 2. Why are people buying gold? Because of what's going on with the world central banks. And it's a store. It's a storehouse of wealth. And the people that buy gold, they don't think too much about trading it. Anytime they get spare change, they put what they can or what they want to into gold, and I don't think that's going to change. I interface with a lot of different types, and all the way from blue collar all the way up to more money than they'll ever need. The thought on gold is I just want to have some. It's not I'm going to buy it as an investment. It's an insurance policy. And I don't think that'll change. So it moves into long-term hands. Germany also got gold from the United States, took command of their gold over the weekend. So there's a lot of stuff that's just right in front of you that's saying, you know, this may not be as rosy as our governments would like us to believe. Okay, so the euro is up. And the expected announcement by Draghi this Thursday to start QE will not be supportive for the euro, so I think most people are looking for places to sell it. So 15 to 25, that's where resistance is. Just under it is sell 1. 50 to 60 is sell 2. On the buy side, London, we'll put 50 to 60. That's where support is. I really do not like the buy side to initiate a position. And then 15.25 for buy 2, leaning against this volume right over here. And I think we're in the trading range this week with a down bias because the European Central Bank wants the euro lower. Crude oil. Crude oil's holding in. If the QE begins by the European Central Bank, it's actually a little bit supportive. The euro will go down. OPEC will demand more money for their oil from Europe. So we're in a trading range right now. 50 is definitely resistance. Get up above 49, the buying dries up pretty quickly. You can see it right here. You get below 46.50. Pretty good buying, and right now, so we're at 47.50. We've got a pretty square distribution volume-wise. We've got a P right here, and we've got volume up at 48. So we'll make 48.50 to 75, sell 1. 49.49 sell 2. On the buy side, 47.125, buy 1. And then 46.50 plus or minus buy 2. And we're probably looking at a trading range into the ECB announcement. Okay, the E-mini's up. China beat their growth figures by 0.1%, but it's up, I think, some 30 points from Friday because of the expected QE1 to begin this Thursday. And I mean, you can't fight the tape. So 2050, 2055, we get through that. There's no reason not to expect new contract highs. Fundamentally, if you're looking for earnings, sales revenue growth, earnings per share, the rest of it, it's not there where you need it. The accounting gimmicks by the Fortune 500 to reach their numbers, one-offs, do this, reclassify that, all done with the blessings of our government so that they can show growth, economic growth, and that good times are just around the corner. In normal times, some of these companies would get in trouble for reporting numbers the way that they do. So I think the next big thing as far as the stock market goes is going to be a vulture fund for crude oil to pick up the pieces as the over-leveraged companies disappear. Okay, so here we are. We've got that break that we've been talking about for the last couple of weeks in this 30 to 31 area is right there. It's going to be sell 1. It'll allow them to get stops above the overnight session high, but we ought to be able to do a little bit better than that. We got this high volume number at 36, so our 35 area is really where I think we can engage the market and have a chance of making money. 30 points, if we don't extend the range and take it higher quickly off the day session opening, a 30-point rally from Friday's profits. But I don't think the market's going to break. Our tractor down here is in the 95, 97 area. That would be a great place to engage the market, but obviously that's a way off. So we got really good support, say 2000, 1995 to 2000, and probably resistances in this 50 to 55 area this week. So on the buy side, the bottom of value is in the 15 area, 15 to 17, buy one on the idea that maybe little head fake, little profit taking off the opening, take it down, then 10 to 12 for buy two. And we'll put a question mark at 20. Today's news, doubt will have any impact on the market. I think it's the whole play is for Thursday's ECB rate announcement. Okay, take at least 20 minutes to get everything up and going. I'm going to get busy on that. Be with you as soon as I can.